Hello, Great Walls. It's me again, Hector S. Nkosi. Today, I will be taking you for stock valuations. Remember that, guys. If you've got any questions, you can always email me at nkosihector28@gmail.com. And if you've got another questions while I'm busy explaining certain topics, you are more than welcome to ask your questions on the chat box. Right. Yesterday, guys, I've laid out the stock systems that it's three of them, but we specifically looked at FIFO method. And I would also love also today to look at the FIFO method, right? Because some of you, they were still so unsure of how to get certain values and stuff. I can see majority of you are entering now. I can see KS, welcome. Today we'll be looking at stock valuations, specifically FIFO method. Okay, so now I've tried to, okay, before we go to our worksheet, I need to stop sharing and reshare again. So I need to stop sharing and reshare. Share screen. Okay, share again. Okay, this is perfect. Right. So now, guys, yesterday I explained with you the FIFO method. This was the layout that we did yesterday, if you still remember, right? We went through these things, right? So I explained to you that the price of stock always changes. Shops do not always wait until they are completely sold out before ordering more stock. No wonder we need to keep on thingy to value our stock now and then. So on the shelves, anytime will be, for example, the same cans of condensed milk with a different purchasing price, to agree with me. Because now, guys, we need to go to our supplier now and then. We don't have to wait for the whole stock to finish in order for us to go to the supplier to stock again. So you can, let's say I'm selling handbags, right? Since I'm selling handbags, I need to go to the supplier every time. Maybe there's 10 handbags that are left in my shelves or in my store, right? But because of the rent changes, the decline of the currency or increasing of the currency, the prices or the inflation will always be there and be affected. So we need to know at what price did we buy that particular product at that point in time. So we're using different stock valuations. So on the shelves, anytime will be, okay, I did make an example about the condensed milk, right? Then it says, when we do stock taking, at what price are we going to value the condensed milk can, right? There are three options. At school level, I explained the specific identification method, the FIFO method, and the weighted average method, right? Then now, sorry, then now I said to you, you must be able to explain what the FIFO method. Yesterday, I made an example with a FIFO method, right? Okay, cool. So yesterday we dealt with FIFO method. Tomorrow I will be looking at weighted average, and on Thursday I'll be looking at a specific identification method, right? Then on Friday we'll be looking at a past paper question. So there's this example that I created today for FIFO method. Okay, just hang on. Okay, this is what we went through yesterday about FIFO method. Um, this is the simple and easy way of doing it. The stock that was bought first is sold first. First in, first out. That's what FIFO stands for. And the stock on hand at the stock taking will be the stock that you recently bought. So you sell the goods in order that you bought the stock. The system can be used for any type of business. The trader that stocks product um, do not have a long life, short or limited life, shelf life. We'll preferably use the stock, right? I spoke about durable and non-durable goods. Okay, cool. Proper packing and display is essential. All stock should be in front and the new stock at the back. I made an example with the milk and the loaf of bread. It can be your polony, it can be your Viennas, it can be anything that has an expiring date, basically, right? And I also spoke about the prudence concept that is used, the value of the stock at the end is realistic because the stock is valued at the most recent prices. Okay, cool. I want us to look at activity 3. This is the activity I want us to look at, guys. Okay, cool. So I want you to pay more attention and ask if you've got any problem. It says here, you are provided with the information related to Kima stores. The following stock appeared on their stock cards. Complete the template of the number of stock bought at the purchase price and the selling price of the stock sold. The items below were in stock and some sold. So now, basically here, guys, we are given the information. On the 1st of January, we bought 10 units at 5 rands. On the 14th of February, yay, that's the Valentine's Day, we bought 15 units at 7 rands per unit. On the 31st of March, we bought additional 12 units at 7 rand 50, right? Then the total purchases units, you need to say 10 plus 15 plus 12, you'll get the total purchase units, right? And you also have, and they're telling us that we have sold 25 units at 12 rand per unit. Now, required. Let's see what does the required mean. It says to you, make use of the FIFO stock method to calculate the number of units unsold, cost of sales, gross profit. Show the trading account in the perpetual and periodic stock system. Now, I'm still going to explain the perpetual. The perpetual, I need to highlight these because you did this, guys, in grade 11. Your stock systems, right? Your perpetual and periodic system, right? Right. Okay, cool. So I need to take you step by step because some of you yesterday, they were still confused on what was happening. So I want you to, I'm giving you only 30 seconds to copy this table in your workbook or in a piece of paper, because once I start to calculate, you won't be able to see this table. So I'm just giving you just 30 seconds to copy this table. Okay. Okay, let's answer the following questions now. It says now the number of unsold units. Okay, cool. Now, we have to calculate the number of unsold units. Okay. So now, what will be the number of the unsold units? Right. Remember now, just going to the memo. That was activity 3. Okay. Oh, here's the table again. Therefore, you don't have to copy it. Okay. This is perfect. You don't have to copy it. Okay, that's perfect. Let me check at the chat box whether all of you are following or not. Okay. Okay, cool. Seems like everyone is following. Now, this is the table, right? So now, if you want to complete your table, remember these values, they were not given. So you bought one on the 1st of Jan, you bought 10 units at 5 rand. So 10 times 5 is 50 rands for 10 units at 5 rand. You went again to on the 14th of Feb to buy 15 units at 7 rand, and that's 105. So 15 times 7 is 105. On the 31st of March, you bought 12 units at 7 rand 50, and you got 90 rands. Therefore, the total purchased units, there were 37. However, you only sold 25 units. So now, the number of the unsold units, you're going to take your total purchase minus the sold units. Therefore, the unsold units, they are 12 rands. But they only wanted what? The number of the unsold units. So in other words, what is the formula of calculating the number of unsold units? So in this case, you can say opening stock, but in this case, you don't have opening stock, plus total purchases, total purchases, right? Less what? You must less your sold units. Therefore, you will get what? You'll get the number of the unsold units. Remember the formula for the unsold units? It's always your opening stock plus purchases minus your sold units. That's the formula basically. But here we don't have any opening. If you do have the opening, don't forget to also start with your opening plus purchases. So with this activity, we only started here. We started with total purchases, of which it was 37 units, less the sold units, of which it was 25 units. Therefore, the number of unsold units, it's 12 units. Number two. Number two is saying to you now, guys, the value of the unsold units. Now they are looking for the value, guys. There's a difference between number and the value, right? This is the value, right? The value of unsold. Here they were looking for a number of unsold units. And remember that you are under FIFO method, first in, first out. So what does it mean? It means that since you are under FIFO, and you have sold how many units? 25 units. And the value of the unsold is 12 units. And yes, now, which means the stock that you bought, the FIFO says the stock that you bought first is the stock that you sell first. So do you agree with me that this 25, 10 plus 15 has already been sold? The unsold units are these 12 units. And these 12 units, its value, it was based at 7 Rand 50. So basically here, you're supposed to have this 12 units at 7 Rand 50 per unit. And now the value of the unsold units will be 90 rands using FIFO method. How did you get 90 rands? 12 units multiplied by 7 Rand 50 because we're using FIFO method. FIFO method says first in, first out. Since we sold 25, which means this was the first 25 we have sold it, which means the last 12 is the unsold one. But you're going to base it at R7.50 because that was its value at that point in time. Now, how would we calculate cost of sales? Now, cost of sales now, guys. With your cost of sales now, easy, right? Remember now, your cost of sales, you can always calculate them by saying your opening stock, right? Plus your purchases, right? Less, yeah, it's your opening stock plus your purchases, right? So your cost of sales basically, right? So cost of sales based on what you have sold, right? So the first cost of sales that you did was 10 units at 5 rand and you got 50 rands, right? I just need to highlight this one. Oh, sorry. I just need to highlight this one with the green, then highlight this one again with the green. That's perfect, right? And this is your cost of sales, boys and girls. Sorry, I just need to put a bigger bracket here, right? Need to put a bigger bracket. That's perfect, right? Excuse me. So this is how you got your cost of sales, right? And it was 155 because guys, remember your cost of sales, it is what is costed you to sell. So far you were told that you sold 25. So what was the cost of sales? You sold 25 at 12 rand. This was the selling price, but the 25 at cost price is this. So you must say 10 times 5 is 50 plus 15 times 7 is 105. Therefore, your cost of sales will be given by 155 rands. Now, the next question is saying to you, calculate your gross profit. You should know how to calculate a gross profit by now, guys. You've been calculating gross profit from grade 10, guys, right? You've been calculating gross profit from grade 10. Remember the gross profit, right? In your income statement, it's always sales less cost of sales. What are your sales? It's 300. How did you get 300? You've sold 25 units at 12 rand per unit. Therefore, it's 300. So 25 times 12 rand is 300 rand. So your cost of sales, you have calculated from number 3, it's 155. Therefore, your gross profit is 145. That's perfect. Right. Now, let's look at the trading accounts. Let's look at the trading accounts using the perpetual inventory system. Using the perpetual inventory system. Remember, guys, your trading account, it gives you a gross profit, guys. That's the purpose of a trading account, is to get a gross profit. Remember, you started a trading account from grade 10, right? You did it again in grade 11. But in grade 11, you said, okay, using two different systems, how is the trading account of a perpetual is going to look like? How is the trading account of a periodic inventory system is going to look like? That's what you did in grade 11, right? So now the trading account, it's a final account, guys, right? So what do we mean about a final account? A final account are the accounts that are helping us to calculate a certain figure, right? So it's not an asset, it's not an liability, it's not an owner's equity, it's not an expense or an income. It's just a final account. So a trading account is like your asset disposal account. Those are the accounts that are helping you to calculate something. Here in your trading account, it helps you to calculate your gross profit. We know that in your asset disposal account, if you want to know your selling price of the asset disposed, or if you want to know whether you've made a profit or a loss in the asset that you have disposed, right? Now, your trading account, guys, for a perpetual inventory system, you always have your cost of sales on the debit side, right? Because now cost of sales is what? Cost of sales, it's an expense. Does it make sense, guys? Therefore, how did we get our cost of sales? We said 50 plus 105 is that 155 that we got. The cost of sales from number 3, you must put it here. Then you're going to have your sales, right? Your sales, we got 300. It was 25 times 12 rand. Therefore, your balancing figure, it's your profit and loss, because we don't have an account that is being called gross profit, but however, we have to call it profit and loss because we have to take these two profit and loss account. Now let's look at the trading account using a periodic inventory system. Now we are using a periodic inventory system. Now, with your periodic inventory system, guys, it's different, right? This is the one, your perpetual is the one that you've been using in grade 10, right? But in grade 11, they've introduced you to a periodic inventory system, to a trading account of a periodic inventory system. So the examiner can ask you to calculate a trading account, or to draw up a trading account based on what system the business is using. So you need to be able to calculate what, or to do a trading account on a periodic inventory system, and also you need to be able to do a trading account on a perpetual inventory system. And just know that at the end of the day, guys, you are going to get same amount. So basically, the trading account of a periodic inventory system looks like this. It says opening stock. You did it in grade 11, but let's recap. It's opening stock. In this case, you don't have any opening stock. It's 0. Net purchases. So net purchases, it says purchases with net. If you've got returns, right, you must subtract them. But in this case, we don't have any returns. But in future, it's net purchases, right? Meaning now your purchases now, it was 50 unit, it was 50 rands, 105 rands, and 90 rands. Let me take you to your purchases that you have made. Trying to scroll up, just a second. These are the purchases that you have made. Here are the purchases. It was 50 rands, 105, and 90 rands. So they total to 205 to 245. Right. Then you can have also on the debit side the carriage on purchases. Now, carriage on purchases, guys, it's more of like your transport, right? Your transport on those purchases. In this case, we were not given any carriage on purchases, but if you do have, you must put it here on the debit side of your trading account of a periodic inventory system, right? Then on the credit side, you always have your sales, right? And our sales, we were told that we only sold 25 units at 12 rands, and it was 300. And our closing stock, right? It was 12 units. Remember the value of closing stock? It was 12 units at 7 rand 50, and now you have 90 rands. And this is always going to be your balancing figure. And your balancing figure, guys, your balancing figure, it's always going to be the same as the one under perpetual. Even here we got 145. So guys, you need to be able how to do your trading account using periodic and perpetual. If the examiner says we are using a periodic system and the FIFO method, you know that, okay, periodic system and perpetual, I need to know how to calculate their trading accounts, right? Then you've got your valuations. How do you value your stock? Either FIFO, weighted average, or a specific identification method, right? And this was the last question. Now, guys, I want you to try this one. I want us to try this one. Let's try this one. This is another activity. Let's try activity 4. Now, activity 4, you've got opening stock now, right? The activity 3, you did not have any opening stock, right? Now you have your opening stock. So the opening stock here is 20 units at 4 rands and amounts to 80. Therefore, January, you bought, these are your purchases, 10 units at 5 rands, and February, you bought another 15 units and at 7 rands. And for March, you had how much? You had 12 units at 7 rand 50, right? So here, what you need to do, you must just add your opening stock of 80 rands plus the 245. The 245 is 50 plus 105 plus 90 is 245 plus the 8 is just that now you've got opening stock. I did explain the opening stock. The formula for FIFO for opening stock here in this example, that the number of units unsold is your opening stock plus your total purchases less your sold. Okay. Now, number of units sold. So the number of units sold, how are you going to calculate the number of units unsold? The number of units unsold now, guys, you know that, okay, in total you had 57 units, right? That was your total units, right? Less the sold units, right? And the number of units unsold will be 22 in this case, 22 units. Can you see how easy it is? It's 22 units. Then the second one is asking for the value of the unsold units, right? Now, the value of the unsold units. So the value of the unsold units, we know that, okay, we have sold 35 and we must use FIFO, which means we have sold what? We have sold 20, we have sold 10, and that's how much? That's 30, which means you have also sold 5 from this 15. So the unsold units now is what? Is your 10 units from the 7 rand and your 12 units from the 750. That's your the value of the unsold units. So because we're using first in, first out, we're saying now we have sold the first 35, but we have sold 20, no one there's a tick here. We have sold 10, the one that is tick. So up until 15 January, which means now we have sold 30 units. But now you must also take 5 from 14 February so that you can make 35 of the sold units, which means the unsold units, here you are left with 10, because what you need to do here, that's why I said here you sold 5. The remaining is 10 units at 7 rand. So no wonder here we said 10 times 7. Right? And here we've got 12 units at 750. So you need to say 12 times 7 rand 50. Then 10 times 7 is 70 plus your 12 times 750 is 90. Therefore, the value of the closing stock or the value of the unsold units is 160 rands. Perfect. Cost of sales now. Now you have sold 35, right? You have sold 35. Now you must calculate in those 35 how much it costed you, right? So the first 20, it costed you 4 rands. That's the first 20. It costed you 4 rands, right? 20 times 4, right? Then the next 10, it only costed you 5 rand, right? Excuse me. That's 10 times 5, we get 50. But now, remember, we need to reach 35. So it's 10 units and it's 20 units and 10 units plus 5 units at 7 rands from the 14th of Feb. So it's 5 times 7. It's this one. It will give you cost of sales. Therefore, this times that is 80, this times that 50, this times that is 35. Therefore, your cost of sales is 165. Right. Gross profit. We know that the gross profit is always sales less cost of sales. You'll get what? Your gross profit. So sales less cost of sales is your gross profit. What are your sales? 420. These were your sales. 420. Those were your sales. And your cost of sales, you've just calculated them from number 3, it's 165. Therefore, your gross profit is 255 because 420 minus 165, it should give you a gross profit of 255. Now, let's calculate now trading accounts using the 2 different inventory systems. So we're going to start with our perpetual. Remember the perpetual, it's easy, guys, very easy. It's the one that we used to do in grade 10 a lot, right? This is the one that you used to do in grade 10 a lot. Then in grade 11, we actually introduced the periodic one. So far, you've got 2 types of systems. So the trading account, the purpose of a trading account is to calculate gross profit, basically, in a T account. So on the debit side, you always have your cost of sales because you always close your cost of sales with trading account, basically, right? And on the credit side, you always have your sales, your net sales, and it's 420. Then this was the balancing figure, your profit and loss, and is your gross profit of 255. When you say this minus that, you'll get that. This will be your balancing figure. Now, let's look at the trading account of a periodic inventory system. Now, remember, it has a format, guys. Your opening stock, your purchases, your carriage on purchases, your sales, your closing stock. Now, this one now, you do have your opening stock. Your opening stock was 20 units at 4 rands. Now, if you look here, this was your opening stock, 20 units at 4 rands, and it was 80 rands. Right, it was 80 rands, and now you have 20 times 4 is 80. Your purchases, you must add all your purchases from the table given is 245. In this case, we don't have any carriages on purchases. No wonder we have 0. Sales is 420. Your closing stock now, you've calculated it from number 2. It was 160. The value of the closing stock is 160. Then you have it there on your credit side of the trading account. Therefore, your balancing figure for a periodic inventory system is 255, same as the perpetual one. It's just that here you were using what? A periodic. So you need to know the periodic and the perpetual. Right. Okay, guys, that's it from my side. I hope everything is making sense. Please feel free to ask me any questions if you've got any problems. Feel free to email me at nkosihector28@gmail.com if you've got any queries. From my side, that's it for today. Have a lovely evening. Goodbye, grade 12s.